Sonja, great to have you with us. Thanks so much for joining us. So we are seeing a little bit of risk off in global equity markets today after really a positive week for global markets last week. Were equity markets pricing in too much positive news on trade before today?
No, I don't think so. But I think we have to assume that the kind of risk on, risk off will continue because we have so many kind of not really conflicting headlines, but there's so much going on. There's lots of focus on the fundamental growth picture. There's lots of focus on trade talks, politics. And I think we probably had a bit of a sweet spot where, particularly in Europe, we have seen a bit of an improvement in underlying data. There was a bit of optimism around Brexit, which obviously last week in Salzburg was slightly, changed. And then we had a bit of a vacuum in terms of the trade talk. So there was sufficient room for particularly those sectors to perform that have been underperformers since the beginning of the year. So we've seen banks, we have car manufacturers. So those that have been directly affected by those headlines weaker, they continue to outperform. And now, obviously, we're back to, trade talks, Brexit talks, and lots of negative headlines surrounding those two areas.
Yeah, and one of the big questions is whether US equity markets are going to continue to outperform. Is the America First trade going to continue?
No, I think we have to be focusing here on fundamentals because the US economy is outperforming the world. We know that this is on the back of the fiscal stimulus program that President Trump has put in place. So there's a really good reason why this is happening. And so I think for the time being, we should make sure that this is not related to any headlines or America First, but pure outperformance economically.
Right.
Now, the big question mark you're quite right to put out there is, can this continue? And in particular, if it's related to the fiscal stimulus side of the equation, we know that towards the end of 2019, 2020, this is going to fade and actually turn into a fiscal headwind. And obviously, by this time, we have to ask the question, when is the market going to discount that this is going to happen? Because at the latest, this is when, obviously, the market will continue to move in line with the rest of the world. One caveat, and this is very important, because the fiscal stimulus, obviously, has been put in place towards the end of the cycle and might increase inflationary pressures, and hence we might have implications on how the Fed is going to react. So a very interesting balancing act, but there's a very good reason why the US has been doing so well until now.